So now we are going to see a third question. So Pasco Limited is manufacturing 4,000 units of product Zimsam utilizing 100% of its machine capacity. So they are producing Zimsam as 4,000 units. So for that they are utilizing 100% capacity. The selling price per unit and the cost per unit of product Zimsam or under. So selling price per unit 700, cost per unit material cost 100, variable machine operating cost 100 per machine hour, so 150. That means what will happen here? So here they are paying 100 rupees per machine hour, but totally per unit it is incurring 150. So that means 150 divided by 100. That means 1.5 machine hours is required. So to produce 1 unit of Zimsam, we need 1.5 machine hours, 1.5 time. So other factory overhead cost 180. So selling and distribution overhead cost 200. So profit is 70. Pasco Limited can sell maximum 8,000 units of product Zimsam in market. So we have total demand as 8,000, but as of now we are producing only 4,000 units. That is our capacity, right? So however, due to limited machine hour capacity, because the capacity, machine hour capacity is limited. So this is our key factor or scarcity factor. So it can produce maximum 4,000 units of products in some in-house. In-house means we itself producing. So SB Limited, so another company, a quality supplier of product can supply up to 3,000 units of products in some at a price of 620 per unit up to Pasco's place. So here if I'm purchasing, that is I'm purchasing from SB Limited, I can get it up to 3,000 units at the price of 620 rupees per unit. So Pasco Limited can use its facility to manufacture an alternative product. So if we are buying this 3,000 units, my capacity will remain idle, right? So I can apply for another product, Bon. So it can sell up to 10,000 units of Bon annually. So the demand is 10,000 units. So and cost per unit of product bonbon orders under. So selling price per unit, cost per unit, direct material cost 300. Here variable machine operating cost 100 per machine are same like that. But here we are incurring only 50. That means 50 divided by 100. That is 0.5 hours only required to produce 1 unit of output. So other factory overhead cost. So selling and distribution overhead cost, profit per unit is 200. So Pasco Limited provides you the following additional information. So variable selling and overhead cost per unit or as 100. So manufacturing product Zimsam in-house 80 rupees. So purchasing product Zimsam from SB Limited 60 rupees. So if I'm manufacturing Zimsam, I need to spend 80 rupees as selling and distribution. If I am purchasing, I need to spend only 60 rupees as selling and distribution overhead. So for Bon, I need to spend 70. Okay, Pasco Limited uses machine hours as the basis for assigning fixed factory overhead. So fixed factory overhead cost for the year is 2,40,000. The cost will not be affected by product mix decision. So this cost won't change because of this changes in Zimsam and Bon. So required suggests the quantity of each product that Pasco Limited should manufacture or purchase to maximize its profit. So they are asking us to suggest whether we need to manufacture or purchase in if we are manufacturing in what quantities, if we are going to purchase that in what quantities we need to tell, so that we can maximize the profit. So then based on this decision we need to calculate total profit. So this is the 40-mark question. So quite tricky question. So I advise, if you are very confident, then only you go for this 14 mark question, or else it is better to leave this question and try to attend the other questions, because this is a lengthy and time consuming questions. Usually, students, what we will do, we will be going on attending this 40 mark question by spending 1.5 hours, and we don't have time for attending other questions, right? So if you are confident enough, then only you please try to attend this type of questions. That is my humble request. So now, what we need to calculate, whether we need to purchase or produce, and in what quantities we need to purchase, or we and what quantities we need to purchase or produce. That only we are going to see. So first, I want to calculate what is factory overheads, right? So here we have only fixed factory overheads. So they have given other factory overheads, that is inclusive of both fixed and variable, right? So this we need to calculate. So here also it is mentioned other factor overhead. So it is inclusive of fixed and variable. So fixed component we have in total, that is 2,40,000. So variable component we don't know. So we need to calculate that. So first we need to calculate how much machine hours is required to produce 4,000 units of Zimza. So let's calculate this. So machine hours required per unit. Okay. So how we will calculate? We already calculated that. That is cost per unit divided by machine hour rate. So for Zimzam and Bonbon, we will be calculating. So for Zimzam, we already calculated 150 divided by 100, that is 1.5, and here it is 50 by 100, that is variable. So 0.5 we have already calculated. So now total hours required. So Zimzam, if I am producing Zimzam, I will be producing 4,000 units. If I am producing Bonbon, I will be producing 10,000 units. So how many hours required? 4,000 into 1.5. Here 10,000 into 0.5. So 6,000. Here it is 5,000 hours. So my factory overheads, they have given 2,40,000. Right, this is in total. Remember, this is in total. So if I am producing Bonbon, I won't produce Zimzam, right? So in that case also, I will be incurring the same 2,40,000. So what will be the hourly rate? This is fixed factory overheads. So what will be our hourly rate? So fixed factory overhead rate per hour. If I am calculating this 2,40,000 divided by how many hours I will be having, 6,000 hours. So in this case, it will be 40 rupees per hour, right? So if I required per unit, because here in this problem, here they have mentioned per unit only, so I want to calculate in unit only, so then only I can calculate variable overheads. So 40 into how many hours is required to produce 1 unit? 1.5. That means 40 into 1.5, 60 rupees. So fixed factory overhead for Zimzam is 60 rupees. So first I am calculating per hour, then only I calculate it to unit. So here same way 2,40,000 divided by 5,000. So we will be getting 48. So here 48 into zero point 0.5 hours is required. So 24 rupees. So instead of this, you can calculate in a single step, like 2,40,000 divided by 5,000 into zero point 0.5 also you can do. So instead of doing two steps, you can calculate in a single step. Either way, you can calculate. So now we have fixed factory overheads. So now total factory overheads, that is here for 180 and bonbon is 50. So 180 and 50. So what will be the variable factory overheads? So total minus fixed, right? So that means 180 minus, here my fixed is 60. So 120 will be my variable factory overheads. In this case 50 minus 24, that is 26 will be my variable factory overhead. So we have calculated what is variable factory overhead and all. So now I can calculate whether producing Zimzam is better or purchasing Zimzam is better. So I want to decide it first. This decision will be made purely based on our mission hours, because this is a key factor. Mission hours will be my key factor, right? So first I am calculating purchasing Zimzam from SB Limited. So what is the cost of purchasing? So I want to incur 620 rupees as purchasing price, right? So cost of purchasing 620 rupees, and also I need to incur this variable selling. So selling and distribution overheads. Here how much I am incurring? Variable selling and distribution overheads as 80 rupees for in-house, and for purchasing 60 rupees I need to incur. So add variable selling and distribution overheads 60 rupees. So I need to spend totally 680 rupees. Here I am not considering fixed selling and distribution overheads, because either way I am going to incur the fixed selling and distribution overheads. Even though I am purchasing or producing, I am going to incur the same selling and distribution overheads, because you can get confused. Here it is said 100, but here this variable is mentioned as 70. So the difference will be fixed, like that you will be getting confused. The difference amount in any ways we are going to incur, so this is not at all relevant. So because if that particular cost is going to change because of my decision, then only we are going to consider. So that cost will be considered as relevant cost, and that will be considered in workings, right? So this fixed selling and distribution overhead cost is not at all going to change my decision, because anyways I'm going to incur the same. So I am ignoring this fixed selling and distribution overhead cost. So fine. If I am purchasing Zimzam, I am going to spend 680 rupees. What if I am manufacturing the Zimzam? So for manufacturing Zimzam in-house, right? So for manufacturing, I'm going to spend my all variable costs. I'm going to incur, like direct material, direct labor, variable overheads, everything. So for that only we have calculated variable factory overheads first. So this 100 I'm going to incur. So variable overheads variable machine operating cost. That is 150 we have. Then variable factory overheads. So we have calculated no variable factory overheads here. So that is 120. So that one we need to consider. And here also what we need to consider, selling and distribution overheads. So what is variable selling and distribution overheads? They have given 80 rupees. So I need to consider this 80 rupees alone, not in that first table. So my total cost will be 450. So based on this, I can say manufacturing Zimzam in-house is benefit, right? So it is beneficial to manufacture Zimzam in-house. So this is our decision. Okay, fine. Now let's coming to bonbon and Zimzam. Let's we decide whether to manufacture Zimzam or bonbon. If manufacturing bonbon is more beneficial, I can go that, right? So actually, first question they have asked. mm, so they need to manufacture or purchase. So for that only we prepared this statement. So now I am comparing Zimzam and bonbon. Okay, so I need to compare contribution. So based on that only I can give ranking. So contribution required per machine hour. So remember this is a key factor problem. So Zimzam, bonbon. So here selling price per unit they have given 700 rupees for bonbon and 700 rupees for Zimzam. So both 700. Then less variable cost. So direct material. So direct material we have already taken 100 for Zimzam. So variable machine operating cost 150. So variable other factory cost, so that one also we already calculated 120. So variable selling and distribution cost 80 rupees. So here my total variable cost will be 450 rupees. So my contribution will be, so contribution how we can calculate, selling price minus variable cost, it is 700 minus 450. So 250 will be my contribution. So okay, now this is contribution per unit. What we required, contribution per machine hour is required. Then only we can identify which one is best. So contribution divided by number of machine hours required per unit, that is 1.5, right? So 250 divided by 1.5, I will be getting 166.67. Fine. So same way I am going to produce for calculate for bonbon. So bonbon direct material cost 300, variable machine operating cost 50. So 350. Your variable other factory cost we have calculated as 26. Variable selling and distribution cost 70. So my total variable cost will be 446 and contribution is 254. So now again I am going to calculate contribution per machine hour. Here machine hour is 0.5 hours. So obviously this will be highest contribution. So ranking will be given for bonbon. First ranking will be given for bonbon and second is Zinza. So here also we need to write this comment, then only we will be getting full marks. So since machine hour is key factor, first manufacture bonbon and then Zimzam. So if still we require, lastly we can purchase Zimzam to maximize profit. If still demand is existing, then we can do this. So this is our suggestion. So let me calculate how many units we need to purchase or produce. So total machine hours available is, they have mentioned in the question. So 8,000 units of Zinzams in market, but we are producing only 4,000 due to capacity, right? So total available machine hours. So we are manufacturing 4,000 because of limited capacity. So 4,000 into 1.5 hours is required. So 4,000 into 1.5, that means 6,000 hours is available. So based on 6,000 hours, I'm first going to manufacture bonbon, right? So manufacture bonbon. So how many units we can manufacture? 10,000 units. So time, so machine hours required for this is 10,000 into 0.5. That means 5,000 hours will be spent. Already we have only 6,000 hours, right? So in 6,000 we are spending 5,000 hours. So remaining, that is remaining machine hours, 6,000 minus 5,000 we have utilized for bonbon. So 1,000 hours utilized for Zimzam. That means how many units I can produce. So for 1 unit I required 1.5 hours. So in 1,000 hours, how many units we can produce? So 1,000 divided by 1.5. So I can produce 666.67. So let us assume we can produce only 666 because there is shortfall of 0.34, right? So I'm assuming 666 units can be produced. Even if your calculating is as 667, it is fine, it won't make any issue. So I can purchase maximum 3,000 units, right? Because my demand for Zimzam is already high only, so I can purchase maximum units from SB Limited. So fine. So this is the units calculation. Let us calculate total profit. So this is the answer to point 1. So we have calculated what is the quantity for manufacturing and purchasing. So now we need to calculate total profit based on the above. So computation of total profit. So I'm considering contribution itself so that I can easily complete my answer. So contribution for bond. So bonds contribution is 254, right? Per unit I'm taking. So 254 is contribution. Into how many units I am going to produce? 10,000 units. That is maximum of 10,000 units I am producing. So 10,000 into 254. So I will be getting a contribution of 2,54,000. Then contribution from Zimzam. This is in-house, okay? I am manufacturing. So what is the contribution I will be earning? 250. So how many units I am producing? 666. So 666 into 250. So 1,66,500. Fine. If I am purchasing Zimzam outside, what will be the contribution I will be earning? So for purchasing Zimzam, cost which we already calculated here is 680 rupees, right? My selling price will be 700. So just we are getting 20 rupees as my profit. So this will be my contribution. So this is for purchasing. So 20 rupees. How many units I am going to purchase? Maximum 3,000 units. So 20 into 3,000, 60,000 will be my contribution. So total contribution will be 27,66,500. If I am reducing my fixed factory overheads, that is 2,40,000 altogether, not for individual products. So many people will make a mistake here. They will be reducing 2,40,000 for bond one separately, and again 2,40,000 for Zimzam separately for in-house. So they will incur a loss. But remember, we need to reduce only once because this is an overall factory cost. So we will be getting a profit of 25,26,500 as profit. So for me it took 30 minutes using Excel calculations. So please plan your questions accordingly so that you will be getting maximum marks. So it will be hardly take 45 minutes at least. So please think twice before attending this type of questions. Okay, next question number 5. So this is a similar problem compared to last December term examination, but a little bit of variance are there. So now see, this is a cash budget kind, and this is also a 40 marks problem. So this also will take less than half an hour, minimum half an hour. So here they are manufacturing product X and Y and sells the products to its east and northeast division. So budgeted sales unit from Jan to June they have given. So product X East division and North East division for 6 months they have given that quantity, and for product Y also same. So additional information: sales price per unit of product X is 100 rupees and that of product Y is 75. The company has conducted a market survey, and from the market survey it was product X is overpriced by 5 rupees per unit and Y is underpriced by 10 per unit. So considering this, the marketing division of the company has proposed for price range. So here the company has approved the same for this price range. So that means for product X this is underpriced. So what we will do, we will be reducing So for X, we will be reducing 100 minus 5 rupees. That means the new selling price will be 95 rupees. So many will add this. So if it is overpriced, people won't buy. So we want to reduce. So remember this, for product wise, this is underpriced. So we will be adding that. So 75 plus 10, that means 85 rupees is my new price. So if this goes wrong, this 95 and 85 goes wrong, all your calculation will be in vain. So remember to check twice before doing all your calculations. So then as this result, expect a percentage increase in sales units. So the sales units also getting increased by 5% for the East division, and for North division just getting increased by 10%, and the same way for Y, 10 and 6%. So the company says, so we need to incorporate this in units also. So the company says 20% of its product in cash, remaining 80% of sales are in credit basis. So here there is a cash sale as well as credit sales. So 30% of credit sales are collected in the same month, and the balance 65 are realized in the next month. So on an average, 5% of credit sales become bad debts. That means this 5% we are not getting in cash. So in cash budget, it won't reflect anywhere. So many people will put bad debts in expenditure. Bad debts, we are not receiving any income. That is called bad debt. So we are not showing that income. We should not show it in expenses. Remember that. So, considering the risk of bad debts, the company is planning to enter into a factoring agreement with PVK Limited for the sales made on credit with effect from June. So, we are entering in factoring agreement from June only. So, this will come in picture only in the month of June, not for the previous month. So, we need to pay some factoring commission, right? That is 2% on entire credit sales proceed we will be getting in same month. So for that we are paying 2%. So PV ratio of the company is 40%. So PV in the sense this is contribution. So contribution is 40%. Then my variable cost will be 100 minus 40. So variable will be 60%. So 60 again 60 percentage of the variable cost. So in this another 60 percentage will be for direct material cost which are paid 1 month lag. So in this 60%, okay, that we are going to pay in 1 month lag, and another 30% of variable cost or direct labor cost which are paid within 7th of the subsequent month. So remaining variable or factory variable overheads. So 50% of variable overheads are paid in the same month and balance in the next month. So fixed cost of the company for the whole year is budgeted to be 50 lakhs including depreciation of 2 lakhs. So depreciation is a non-cash item. So since it is a non-cash item, we should not consider this in budgeting. So out of 50 lakhs, 2 lakhs is considered as depreciation. So this is evenly distributed overall months and cost incurred or paid in the same month. So that means how much will be my fixed cost paid in cash. So 50 minus 2, that is 48 lakhs we are going to pay in cash. So this is incurred all throughout the year, that is divided by 12. So we will be getting 4 lakhs. So per month I am going to pay fixed overheads as 4 lakhs per month. So cash in hand, that is opening balance 2,70,000. So we need to prepare a cash budget for 3 months ending, that is April, May, June we need to prepare. So first we will calculate sales, then only we can calculate other things. Because all the information is based on sales only, this variable cost, everything. So based on PV, we are going to calculate. Everything is based on sales. If sales is going wrong, our entire answer results in wrong answers only. So first we will be calculating sales. So for sales, I will be computing for all the months. What are the details available? I will be computing. So computation of sales, because then only it will help us to calculate for credit sales calculation and all. So don't calculate for April, May, June alone. So calculate for all the months. So now I am going to calculate for product X. So in here we have two divisions, East division. So quantity and rupees. So we have another division North. So this is relating to product X. Same way for product Y. So Jan, Feb. So first I want to incorporate this 5% increase for product X in East division. So 2000. So 2000 into 105 percentage. So the percentage is increasing. So 2000 into 105, 2200 into 105. So 3000 into 105 percentage, 2500 into 105 percentage, again 2400 into 105. So here rupees is already we have calculated. It is 95 rupees for X. So into 95. So for North division, the quantity is going to increase by 10 percentage. So 2500 into 110 percentage, 2700 into 110 percentage, that is 1.1 I am using. So 3500 into 110, 2400 into 1.1, 2000 into 1.1, and 3400 into 1.1. So for North also I'm going to pay only 95 rupees. So my sales will be only 95. So I will be calculating for 95 and the total sales volume will be 17 lakh 24 250. So for product Y, so product Y for East division 10% is going to increase. So same way I need to calculate. So 2000 into 1.1, 3000 into 1.1, 4000 into 1.1, 2000 into 1.1, and 3400 into 1.1. So here we have calculated the selling prices 85 rupees. So I am multiplying with 85. So for non-division, sales is going to increase by 6%. So 1.06. So 2500 into 1.06, 3500 into 1.06, 1700, 1500. So my total sales, including all the divisions, will be, so I'm adding all the sales value X and Y. So anyways, I'm going to calculate for all the divisions together. So my total sales will be 7,80,000 to 900, like that only. So now the next step, we already calculated total sales, right? So we need to calculate cash and credit sales here. So I am calculating cash and credit sales. So in question they have mentioned 20% in cash. So remaining will be in credit sales. That is in 7,80,920 will be in cash, and the remaining will be in credit sales. So in this credit sales, we are going to realize 30% in the same month. So collected in the same month, balance 65 will be in next month. So 30% of credit sales in same month. So that means in this 6,26,320, we are going to get 30% in the same month. So balance, that is remaining 65. So 5% will be in bad debt. So remaining 65 percentage will be in next month. So 65% of credit season next month. So now I am calculating receipts from sales. I required for April, May, and June. So cash sales, that is for April month, like 68,000. For May, 153,70, and for June, 241, 206. So credit sales. So for April, I will be collecting this one. 201,683 and 180,444 I will be correcting. So for April and May I'm doing this. For June I'm leaving it as blank because for June we are going for factory. So they will be calculating that one separately. So this is relating to 30%, right? So remaining 65% we are collecting in next month. That is for March we will be collecting in April, and for April we will be collecting in May. So for May month credit sales we will be collecting in June. So this one I need to enter. For June, 30% I'm not going to consider because here we are going for a factory. So I will delete this so that you won't get unnecessary confusion. So here we are entering into factoring. So in factoring, what they have said, as a result, entire credit sale proceeds are realized in the same month. So entire credit sales. So how much is the credit sales during June? 6,01,480. Sorry, 9,64,824. So entire is going to realize in June, right? So how much I will be collecting as sales? Receipts from sales is 10,74,014 and 7,67,793, 15,96,992. So this is about receipts from sales. Okay. Now coming to calculations regarding cost. So computation of direct material, direct labor, and variable overheads. So this everything is based on what sales. So total sales. So here they have given PV ratio, right? So PV ratio is 40%. So 60% will be for variable cost. So variable cost is 60% on sales. So I need to calculate 7,82,900 into 0.6, like that I need to calculate. So in this variable cost, our direct material is 60%. That is 469 into zero point 0.6. So that means 2,81,844 will be my direct material. So direct labor will be 30%. So 469 into zero point 0.3. So remaining, that is 60 plus 30, 90 gone. So remaining 10% will be my variable overheads. So into 0.1. So this is my total. So we have already calculated fixed cost. That is 50 minus 2 depreciation. So 48. So 48 divided by 12. That means 4 lakhs per month. So we have calculated this one also. So now we can go for budget. So we have all the calculations ready. So we need to remember one thing. So for direct material, they have given 1 month left. So for March month direct material, we will be using it as April. So April we are going to pay in May. and for May we are going to pay in June. So for direct labor, there is one small twist. Actually, if we all understand this twist, we can easily calculate. Paid within 7th of the subsequent month. That is, uh, whatever April's month direct labor cost, we are going to pay in May 7th. So this is also considered as 1 month lag only. So we need to consider this amount only. So variable cost or 50% are paid in same month and balance in next month. So I'm calculating the 50%. So 25 to 10 will be paid in April and the remaining 25 to 10 will be paid in next month. So now I'm calculating cash budget. So particulars. So here opening balance, that is 2,70,000 they have given in question itself. So add receipts from sales. Already we have calculated 10,74,767 this one. So total receipt. So now I am going to calculate payments. So first direct material. So direct material, as already I mentioned, for March month the direct material I am going to pay in April only. And for direct labor same way, but it has mentioned in different terms. So variable overhead, 50% paid in same month. That is this one will be paying in same month. So 50% in next month, right? So that means March month 50% we will be paying in April month. So since this is a 50%, I'm using the same calculation. So now fixed cost 4 lakhs, and here we are having factoring commission for June month. So we are paying 2% as factoring commission. So my total credit sales for June is 9,64,000. Credit sales June is 9,64,000. So in this we are going to pay factoring commission as 2%. That is 964,824 into 2%. So 19,296 we are going to pay. So factoring commission in June month 19,296. So altogether we will be getting total payments. So this will comes to our closing balance. So closing cash balance. So this will taken as next month's opening balance. So my closing June balance is 7,26,026 rupees.